What's up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis here, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, let's dive into it here with Bitcoin on the weekly time frame. We had a very strong weekly close yesterday. You can see this candle has a nice long body coming up after a spinning top doji candle that did not get any follow through from the bears. We traded down almost to the low of that candle to form a higher low, but we did not quite break it and then traded up above that and closed above that candle. That's very good in terms of bullish continuation. The other thing to keep in mind is we had increasing bull volume here, above average increasing bull volume, which is good news for the bulls as well. But as we rise, we need to keep in mind that we are going to need to set a weekly high at some point in the near future. And the reason for that is because it's been a very long period of time before we have done that, or since we have done that rather. So if we look at the magnitude of this move up, we've already went up over 78%. So for us to continue higher is still possible, but every time we go higher, we are losing strength. So we need to keep that in mind. And I would anticipate, since this last week did not validate it, that this week or the week after this is going to be where that high is going to be set. And then we're going to have to look to come down from a higher low before potentially continuing higher for a higher high. Right now, because of the magnitude of this bounce, it's looking very good in terms of the bulls turning this into a weekly bull trend with a higher low and then higher high thereafter. So we'll see what we get here when it comes to the coming weeks and that high being set. If we go down to the 3-day time frame, we have an interesting development here that I was talking about a few days ago, which was the potential for a 3-day bull trend continuation, which is what we're seeing right now. So let me move these rectangles out of the way here so we can see this a bit more clearly. So if we look at just the price action, we can see a clear bull trend here with a low, high, higher low, and then higher high pattern with 2 candle closes above our key high right here. So that makes this black candle a support zone for price because it's the last down candle before this up move. It's the last area where people were selling before this up move where we confirmed a 3-day bull trend. So after you confirm that trend, it's saying the momentum is to the upside. Therefore, the more high probability trades are on the bull side. So that means that you want to go long. So what you can do is you can then say, okay, I'm going to take my rectangle tool. I'm going to slide it onto this candlestick right here. And then you can see how accurate this support level was. We came into it right here. Long lower wick of profit taking. We get a bounce here. We come back into it a second time, get another test right here. And then we come up and we get a significant bounce the second time. And this contraction is very good for an expansion to the upside. When you see the price kind of tighten up and form higher lows and lower highs before eventually breaking out to one side or the other, that's where you're going to see that kind of rubber band-like effect where it kind of springs out of that area. So that's what we're seeing right here. The other thing to keep in mind is the resistance zone that we're getting close to the top of, which is good news for the bulls because this zone has rejected price 3 times. But we finally are probably going to push through this zone and close above it at this point, it appears at least. And the reason for that is because this 3-day candle closed in 3 hours, and right now it's looking really bullish. The volume is concerning at this point, but we'll see where that volume ends up closing in 3 hours. But this resistance level is really just a simple, same exact pattern as we got with this black support level here. We have a low, high, higher low, higher high. And now once we see that, we then take our rectangle tool, we pull it over, and when we look, we can see we come back into it right here. We bounce, we come back into it here again, we bounce, and then the third time that we come into it right here, you can see that we push right through it. We closed 1 candlestick below it here on May 13th, and then another candlestick below here on May 16th. After we closed this candle on May 16th, if we would have went right back up on this candle instead of trading further down, this would have been a resistance level. So once we came back into it right here on August 11th, we got a rejection. I talked about that potential trade right there, that potential short. And then we come into it again a second time, and I talked about, it's likely that we're going to reject off this level a second time because it's a 3-day level. You can see it, we bounced off of it twice. On these higher time frame levels, it's likely you're going to reject off it a couple times. And so that's what we had here, another rejection. We come into it a third time, and we reject off it a third time. But the nice thing is we formed this support zone to kind of help stabilize price in this zone. And what that did was it provided the same sort of support as the resistance was providing on the resistance side, which was multiple tests of the same level holding strong. So you can see 1 test, 2 tests, and then we bounce off of it here. Something else that propelled price up was the hidden bullish divergence here on the RSI. You can see this low is at 60.21. If you look at the number right here, it's at 60.21. And then we have this one at 59.36, which is a lower low. But if we look at the price action, where those RSI levels were, you can see that we're making a higher low in price. And so that's actually invalidating this, saying we're losing strength, and is saying we're actually very bullish. And this is on the 3-day time frame. So when you see a bullish divergence like that, a hidden bullish divergence like that, that's where you can see some significant upside, and that's what we're seeing right now. So I'll be watching this volume profile here as we're seeing declining bull volume on this rise in price. We may see the next kind of 6 days, couple candle closes above this gray level. If we do get a couple candle closes above this gray level, like 2 3-day candle closes above it, and we retest it, there's a potential to go long on that and then target this key high right here, which is from this kind of drawdown where there's a lot of stop losses. So a lot of people's stop losses are above this key high, and the reason for that is because the people that went short here said, okay, I'm going to take this high. If we go above this high again, I don't want to be short because then we're just bullish. So that's going to be an area that I'm watching for potential sweep of, which means that the price would go up, trade up. Here, I'll show you. So trade up. Let's say it comes into that level, it goes above that high, and then the candlestick closes back below that. After that, we're going to probably go down from there. And that's because we need to set that weekly high, remember. So this might be where that weekly high gets set, somewhere near that zone. So that's where I'm keeping an eye on. If we go to the single day time frame, we can see another interesting development here, which I'll show in just a second. Which is this red resistance zone right here, potentially getting turned into a support zone with today's candle close. So if we look, we can see that this resistance zone was printed back here in May with our bear trend. So we have a high, low, lower high, and then lower low. So once we see that pattern, we look for the last up candle before that down move, and this is the area that we're looking at as resistance. You can see that this level held up as resistance here, 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 and then finally we're pushing above it. So we've tested so many times. That's what I was saying a couple days ago in the video, is we're grinding against this resistance zone, and we're kind of just slowly grinding our way up before we just go above this, because this resistance zone is not going to hold forever. If you keep testing it, eventually it's going to break. And it clearly broke right here with yesterday's daily candle close. If we get another daily candle close, this red zone will turn into support for price, which will likely propel price above that gray zone to get a couple 3-day candle closes above that and turn that into a support zone. So that's really good, and that's what the bulls want to see with today's daily candle close in 3 hours. The other thing to note on the 1-day time frame is this super guppy, which is helping price grind its way up here, which is just a collection of exponential moving averages. And these are the faster moving averages here combined with the slower moving averages here in green. So these are longer term EMAs, and we consider these to be what's called investor EMAs. And then these ones are what we consider trader EMAs. And so the reason is because trader EMAs are faster. So people that are trading intraday and intra-week are going to be looking at making trades on those zones. But the longer term traders and investors, rather, are going to be looking to position into something in this green zone. But we haven't touched this green zone yet. So the more we travel up here, the more expanded these EMAs get, and the more likely it is that when we do come down and test them, we will get a bounce. And no matter where the price goes, I'm looking to bid inside of these green EMAs because I believe that this is a great way to participate in this uptrend that we're seeing right now. And usually when we're in a situation where these flip to be green, like you can see they flip from red to gray to green. Green is the most bullish scenario they can be in because they're all below all of the trader EMAs. That provides a fruitful long opportunity, similar to the fruitful short opportunity that you see right here. The first test of the red EMAs when they turn bearish, you can see that was a 20+% gain on the first trade. So that's what I'm looking for this indicator, trending up very nicely right now and just kind of cruising along. If we look at the Ichimoku cloud, we have two of the signs that we need for the most bullish scenario for Bitcoin, which is the cloud flipping green, which it just did slightly, and the Tenkin, the blue line, crossing above the cloud. So now what we need is we need the red line, the Kijun, to cross above the cloud as well. Once we get that, we're in the most bullish scenario that this indicator can be in, and we'll likely see some more continuation to the upside, which is fantastic. Last thing I'll talk about here is the 12-hour time frame. If we look at this from a 12-hour perspective, you can see very clearly that we have established a 12-hour bull trend right here with a low, high, higher low, and then higher high. That makes this last down candle before the up move the area for support, and this goes from about 50,600 down to about 49,600. So it's about a $1,000 range there, and that's going to be the main support zone if we do end up going down. Last thing we'll look at is the pivots, and we can see that the pivot, actually the hourly pivot, falls inside of that zone right around 50,130. That's going to be another main support zone. And then we have the R1 right above that gray level, which is at about 53.7. So those are the key areas that I'm looking for on Bitcoin. I hope this video was helpful for you. If you like this video, please give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on lutheria.com. This is where you can learn all the foundational elements of cryptocurrency trading, such as trend analysis, volume analysis, candlestick analysis, and a ton more. You can get 20% off that course using the link in the description below. And until tomorrow, onward and upward.